Welcome to Franchise Empires, where aspiring entrepreneurs learn exactly what it takes to become a successful franchise owner, from one location to 10 and beyond. I'm the Wolf of Franchises.
Hey everyone, it's the Wolf. Today on the show is Dru Capenito, and this episode is a lot different than some of the other ones I've done. Dru is a franchise broker and has been in the industry for well over a decade at this point. He's seen a lot, he's learned a lot, he knows a lot about many different franchise brands, similar to me. So we kind of just riff and talk franchises, from emerging brands we've seen over the years, why they've taken off and what's made them successful, as well as stories and deals that have been done in the franchise world that surprise us. I think you're going to enjoy this and think of it as sitting as a fly on the wall and just listening to franchise industry folks chat.
The Wolf of Franchises is the CEO of Wolfpack Franchising, as well as a creator at Workweek Media. All opinions expressed by the Wolf and podcast guests are solely their own opinions and do not reflect the opinion of Wolfpack Franchising or Workweek. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The Wolf, Workweek, and Wolfpack Franchising may maintain positions in the franchises discussed on this podcast.
All right, so can you maybe just give a background of how long you've been in the industry and kind of your road to where you are today?
Yeah. The short story is I'm a franchise lifer. So I fell into it back in 2006, straight out of grad school, went to work for a disaster restoration company called Advanaclean. And a couple months after I joined, the company decided to franchise. And so, I had all the assumptions like everybody else does about franchising when they first hear about it. And, did a little bit of digging, and I was like, "Whoa, okay, this is a thing." And there's this whole non-food side of franchising, and so ended up sticking around. And the Jeff Duden, the founder, who's now he's famous inside the franchise circles. He gave me way too much responsibility at a young age. Probably you wouldn't draw it up that way, but so I sucked it all in, and we ended up growing Advanaclean to, I don't know, I had 125, 150 locations when I left 8 years later, and I did everything. We had we were using Salesforce.com back in 2006 and doing a lot of value add things on the back end for that business, centralized call center, all kinds of stuff. So got a ton of experience doing a bunch of stuff, and then got tapped to go do some international franchise development for Tutor Doctor, which is a one-to-one tutor matchmaking service. I knew nothing about international stuff, and but we ended up Tutor Doctor had they were the darling when we were growing Advanaclean. Tutor Doctor was the darling back in 08, 09, 2010, that kind of time frame. And so I lost a lot of deals to Tutor Doctor. So I was, when they tapped me, I was like, all right, I'm interested. It's a lot easier to sell education than it is disaster restoration services, right? So anyways, did some international stuff with them, and I think we ended up growing in 14 different countries, which is, fun and all that kind of stuff. But I had I have twins, and ended up leaving the corporate side to be a broker and do what I'm doing today. So
cool. Okay. Wow, that's interesting. Were you guys doing master franchisees for Tutor Doctor?
In some countries we did, and then in some countries we did not. The UK was amazing. And we did not master franchise it. We had an operations team there. And the UK is a great place to franchise. It was, the market was ripe. They love franchising. And then Australia, we did it ourselves. And then a couple other countries, but South Africa, a couple countries in Africa, we mastered that one.
Okay. Yeah, and if folks aren't familiar, masters effectively in the international market, you sell the rights to the concept to an individual or a company, and there is still a royalty payment that franchisee has to pay back to the top franchisor. But the master franchisee has to set up their own billing, all the infrastructure, and then they can also sell franchisees to anyone within their country, and then from the franchisees they have. The master franchisee is collecting royalties from them.
Yeah, they're like a mini franchisor, basically, for that country or for that area, and they split the fees essentially, and the splits are always a little different depending on who's doing what. But
yeah. What's I'm curious if you're allowed to share, what's the biggest? Because obviously the big food brands. I mean, to be a master franchisee, I mean, and the big ones happened decades ago, but like McDonald's Japan, Burger King in Australia. I mean, to own the rights to a brand in another country, it's usually like for those guys, it's multiple millions, it's tons of millions of dollars. So you ever was there large price tags on these or?
For Tutor Doctor, it was like an owner operator kind of like single person kind of business. So it wasn't like it wasn't going to be like a $5 million, Chick-fil-A or McDonald's kind of thing. So it was a couple $100,000, we would map out the territories and stuff like that, but it was typically like a couple $100,000. And then getting money in and out. I never knew how this whole crypto thing was going to go because understanding how hard it was to get money out of countries, I was like, there's no way these countries are going to try to like
collect the royalties,
to collect to collect the money and then accounting and taxes. Like there's a lot that goes into it. I was always like, there's no way these governments are going to let crypto become a thing because then they're going to lose out on understanding how the currency flows in and out of their country. It's a big thing to look at. If anybody's going into a new country, like taxes and the currency flow, exchange rates, there's a lot to it.
Huh. No, it's interesting. Yeah, I remember even because like for emerging franchisors, sometimes it can be appealing, right? Where you maybe get an international inquiry, and do you think at least the emerging franchises I used to work with, we got excited by it. It's like, well, if we're going to sell a master deal, it's going to be a bigger price tag, and that franchise fee revenue can be really helpful early on. But we were close to doing a deal in China with a coffee brand. This is like 4 years ago for me. And at one point, one of my coworkers was like, it's like, realistically though, if we sold this franchise, they take the concept, they take the branding, and they just never pay us a royalty. They're like, we don't have the money to sue someone in China. So like, that's an interesting aspect too for these like master franchises where like, you really got to know what you're doing and have the capital to enforce things if things go south. Because apparently that happens where there's brands just take the playbooks, the IP,
yep,
and just they're like, we know you're never going to do anything with it, and they basically hijack a business model.
Yeah, it's like which country are you going to, right?
Exactly.
Yeah, and like what controls are you going to have in place to understand like what revenue is really being generated in these foreign countries. There's a lot to it. Exponential Fitness, I think, is doing a pretty good job, but they're publicly traded,
they're massive
monster, right? So go to Canada first. If you want to expand internationally, go to Canada first, which is in and of its own right. The different provinces, they all have a couple different regulations. So that's a good first step.
No, for sure.
And you don't even need to master Canada, really, like that. You can support Canadian operations typically with your US based stuff.
No, definitely. There's one more thought I had there. Oh, I've heard of there's like stories of one of my old coworkers who's been in franchising like basically around the same time as you. He has met people in like the Middle East who basically just buy up American brands and don't necessarily do anything with them. They want to be the master franchisee for American brands or Western brands in general. And they'll shell out like $1 to $2 million for like one of them was an education concept, Mathnasium. It's kind of a trophy where I guess he want this person, I don't know if it was oil money or what, but just very wealthy out there and just likes to show his friends and brag and like.
No, it's like the cultural differences in different countries and how that can play into a business model are significant. Like we did a deal. I forget what country it was. It was somewhere in the Middle East. And Tutor Doctor's whole business model was the franchisee typically would go and meet with the parents, meet with their child to understand what's going on and get a feel for the child's personality so they could match them with the right tutor. Well, we couldn't. Their culture was that a female could not go into somebody else's house. So that eliminated a lot of female tutors from the business model, which, it's half the tutor base, right? So it's like, okay, well, how do you work around that? And, the cultural aspects and how that plays into, I think you've written a lot about it too. Like there's different menus of food businesses in different countries and stuff like that for a lot of those same reasons.
Yeah, no, it's a good point. It's so interesting. I just feel like when you like dive into the weeds of the industry, I mean, it's almost like franchise brands they're treated just like assets internationally at times, and it's just like fascinating. Like, I don't know, you have these, what starts as a small business becomes a sellable concept, and then there's just this whole, it's not the biggest market, but like you and I obviously on the inside of it just know what's going on. But I mean, there's this whole group of people, and that's all they do. It's about buying franchise brands, expanding, or in some cases just buying it just to brag to your friends that you have it. So.
Yeah, it's like you've done a good job of I think helping people understand the inside of the world of franchising, because it's massive, especially the non-food side, which is kind of the side that I run on mainly, but which is big, and it's probably less talked about than the food side, but it's significant. You know, if you drive around town and you start looking at every brand and you know which ones are franchise and which ones aren't. I mean, it's, you know, every third business kind of thing. You know, this emerging non-food side of franchising, which changes a little bit, but it's, you know, it's definitely not on the mainstream in terms of like the media and stuff like that, except for like Orange Theory and Planet Fitness, you know, those kind of things. But there's, you know, if you're driving around town, man, it's like, I don't know, 1 out of 3, 1 out of 4 businesses are typically, you know, on the non-food side franchised. Like I was talking to somebody today, Kevin Wilson, who's the chairman and CEO of Buzz Franchise Brands.
Oh, yeah.
These are the guys that did Mosquito Joe, right when, you know, the mosquito repellent thing was coming into play, and they have multiple brands now. And I mean, that dude is sharp. He's a venture capitalist from Bain and Company, and he has applied a lot of those same principles to British Swim School, Home Clean Heroes, Pool Scouts, and now they have a new one, which is outdoor holiday lighting. So it's like these dull, mundane looking businesses, right? You're like, come on, how much money can you really make with one of these things? And if you peel back the onion on some of those business models, those guys are super sophisticated.
Yeah, no, it's fascinating what he's doing at Buzz. And yeah, it's funny. I think the food franchises maybe are I think there's 2 things that aren't really to your average surveyor of the franchise landscape. Like the food brands, McDonald's, Burger King, Wendy's, Domino's, even like all Pizza Hut, they were started 30, 40, 50 years ago. So they've been around for a while. So that's a big part of it. It's like it takes time to scale up to the number of locations they have and develop that presence. But also like people, for the most part, like everyone eats 3 times a day. And like it's a lot easier to have a customer relationship when it's something that basically everyone in the population is definitely doing. Everyone eats food. And there's so many of these locations. So it's just more top of mind for the average person to associate franchises with food. But you're right. I mean, like there's lawn care franchises and mosquito repellent franchises. And it's not maybe something you're going to interact with from the consumer angle, but it is a massive world out there for sure.
Yeah, they're not the sexiest businesses sometimes, but fundamentally, you know, if you start like looking at the lifetime value of the customers, the recurring revenue, the expense structure, you know, the lower overhead aspect, and then how big some of these businesses can get if you really want to scale them. Like your mind would be blown. Again, I can't talk numbers, but the largest operator of British Swim School, which is a swim school without having to build a pool, he mid 7 figures is what I'm told.
In revenue or profit?
Revenue. Yeah.
Wow. Okay.
Yeah. Renting pool.
And that's a good margin.
Oh yeah. Yeah. So
so let's dive into kind of some of the cooler, just non-food franchises that you've seen and the successful ones, and maybe like how you can figure out which one is, you know, if it's early on in its life cycle as a brand, like what criteria you can look for. But I guess let's talk about British Swim School. So to start, and we can jump around. That's a concept, right? Where, like you said, you're not, there we go. Where you're not, you don't have to build a pool. You're just like using, if there's public pool facilities, right? You come in and maybe rent it on a per practice basis or per class basis.
Yeah. You rent it from like a hotel pool that's not being used all the time. And they have a deal with LA Fitness and some other national chains that have these pools that, you know, you kind of have to have it, but it's not a revenue generator, you know, a lot of times for these people, these companies. So yeah, they just do a lease, and they figured out how to make that work. And so you don't have the expense or the time of having to go through the construction process and all that kind of stuff. So there's, like any business, there's going to be some there's some pains with it. But the swimming market is one. I mean, you see the level 5 guys getting involved with it, right? I mean, and they've done. Big Blue has been, again, it's not one of these talked about franchises, but the growth that they've had with Big Blue, which is the other end of the spectrum, which is multi-million-dollar investment. You are building a pool.
Yeah.
I mean, they basically almost sold out the country in like 3 or 4 years.
And
it's crazy. So it's a big market, like this, the swimming, kid safety, swimming, fragmented, and which is kind of one of these niches that hadn't really been gotten after.
Yeah, no, it's for sure. It is interesting because that is totally like direct opposite lens from a business owner, where one, you're having to shell out multiple millions of dollars, which is interesting. The level 5 guys, they like that because they feel like it's actually a moat, just like the pure capital that it takes to launch one of them. And so they're like, if someone wants to compete with us as a concept, like they have to go find these big time owners that can actually shell out for it. And they clearly have the network to kind of find the franchisees that can do it. And they feel that also, right, they're able to provide a better service or different kind of service because they're building their own facilities. So like there's a different value prop they can offer that the franchisee can offer the consumer compared to British Swim School.
Yeah. And at the end of the day, like both of these companies, I believe, like spend a significant amount of time and resources mastering their model, right? Like Big Blue is not trying to be British and British is not trying to be Big Blue. Like there's probably enough to go around for everybody, but they're two different operational businesses. And so like how, these companies that spend a lot of time and focus mastering their unit model, like that's where that's where, the really good franchise companies separate themselves significantly from all the players that you see on the franchise directories and, yada, yada, right?
Yeah. Yeah, no, for sure. And I think it's interesting too, because like a big question, I'm sure you got it a lot too, right? Is like, hey, I don't have the money to shell out for these big food franchises or even the fitness and a Big Blue, like the Big Blue Swim School. Like basically brick and mortar brands are out of reach for a lot of people. But there is this class of like British swim schools where, because I think the common belief is, okay, if I don't have cash, I got to go start like a home services business, like lawn care or plumbing or whatever the case is, which that is like probably the epitome of unsexy. There's a lot of unsexy franchises, but like those are the least exciting, I think, to the average person. But like there's British Swim School, there's Soccer Shots or a newer one, Soccer Stars, right? So there's these non-home service franchises that don't require you to buy brick and mortar, but it's a lower investment and you could still like get up and running quickly, cash flow. So like child services is kind of a big one. That's where I lump in British Swim School and like the Soccer Stars, right?
Oh yeah.
Yeah, right. I mean, where there's still good models, and you just said, I mean, you can still expand to multi-units and earn a pretty good living off of them, if not even just using it as a stepping stone to something bigger.
Yeah, yeah. Because I mean, like you said, like budget being properly capitalized is half the battle for a franchise owner.
Yeah,
and it's half the battle for a franchise company, which is like one of the characteristics to look for in a lot of these emerging brands, right? Is hopefully they're overly capitalized and they're not relying on revenue from the franchise fees to sustain themselves. So yeah, there's all these characteristics. If I was to break it down, right, like Dru Capenito's opinion, anybody who's looking at doing a franchise needs to do their own independent investigation. There's my disclaimer. Like you gotta evaluate all these businesses, but like a lot of the franchises I think that you see like take off and not getting on the news kind of thing, but like do a good job of expanding nationwide and do create a network of happy and profitable franchisees. Like they're not creating a market, right? Like they're taking something that people either know about or are already purchasing and just figuring out a better mousetrap to capture some portion of that demand into their business. They typically don't need to be the biggest player in town in order to have a very successful business, right? So they're not creating a market a lot of times. They're tapping into something like Stretch Lab, right? Like Stretch Lab ended up being a runner. And when I first heard about Stretch Lab, I was like, I don't get it. Well, I was, I had to have trash like everybody else did. And I think they went through a little bit of learnings, but if you think about it, right, like Stretch Lab, stretching's not new. We all know we should be stretching more, and it's good for our bodies, good to prevent injury, recover from injury, the whole 9 yards, right? But nobody had really mainstreamed it. Well, Stretch Lab ended up mainstreaming it, and I think they, they'll probably tell you something differently, but I think they accidentally tapped into this wide demographic of people, from like the 15-year-old super athletic kid whose parents are paying for everything under the sun to make him the next Peyton Manning or whatever, and then to the to the 70-year-old that can't exercise, but stretching's a good way for them to get some muscle movement. So, Stretch Lab was one of these businesses that just kind of mainstreamed this stretching idea, and
it
took off.
Interesting, because like I'm thinking it's like I don't know. I don't know much about the actual, like, if I was to walk into one, what the class would be like. I don't know if it's one-to-one.
Stretch Lab?
Yeah. Like, it feels like lazy person's yoga.
You're in Austin. Go check it out. Dude, you lay on a table. It's 1,500 square feet. Super small footprint. And they have 8 tables set up. There's no private rooms. So, like, everybody's getting stretched out in front of each other. And it's got this cool hip vibe, but it's simple build out, simple construction, which drives down the traditional investment to get one open. And again, I don't know what I'm allowed to say, but put it this way. The people that I know that have owned Stretch Labs, you'd be surprised at what kind of numbers they're driving out of 1,000 square feet of a location.
Yeah. I mean, is it one employee per person?
Yeah.
Like, meaning like,
yeah.
So I just have an individual person stretching me out.
The flexologist, man, you lay on the table for 25 minutes and a flexologist does their thing and stretches out your body.
How much does that cost me as a customer?
Oh man, from what I understand, they've been pushing the prices because they can. I think it starts at a 25-minute stretch. God, I'm going to get quoted here.
I mean, we can look this up. Just what's your guess?
I want to say it's like $1 a minute kind of thing, typically, maybe, or more. It could be more than that.
Okay.
Like I got under a founding membership, and it was like $200 a month for 4 50-minute stretches, which I don't think that they make that offer anymore because that was a good deal. So I think if I had to guess, that would probably be like a $350 a month membership. But that's for the 50-minute stretch. If you do the 25s, which you can do, it'd be half that or something, probably.
It's just like a stretch where I'm sitting there and I'm like, because like if anyone's out there's not, like, I used to play soccer, we would do stretch sessions sometimes. Like, they're working you, like, where you're touching your toes to the point you're breaking a sweat. It's like almost painful. Like, is that the kind of thing it is, or am I like checking my phone, scrolling Instagram while they're stretching me out here?
Yeah, no, I mean it's probably similar to yoga in some ways. Like, there's breathing that you want to synchronize with the stretching, and so by having somebody else stretch you out, you get a 10x deeper stretch or whatever the number is. And they will apply, like they'll keep kind of increasing the resistance or the depth of the stretch, and the breathing helps a lot. And then you just kind of, you have like a safe word that you tell them once it gets if it's too much. So
it's interesting. Yeah, I mean, I see. I'm not asking because I know you can't say, and it's not in the FDD. So, but like, to close out 2021, and they were doing about $50K in revenue a month was the average. So like, close to $600K a year run rate, which I have no idea what the margin is on these things, but I guess it sounds like the brick and mortar is not much. And then you're just paying the people to stretch, the flexologists, like you said. I don't know how much they get paid, but then you got marketing, and I mean, it's probably a decent margin, I'd guess. Like, it's not food. We're definitely pushing above 10%, but
we all thought it was because it had the one-to-one labor, right? We're like, all those consultants that think we know what the hell we're talking about, right? We hear about this new brand and we're like, no way, this thing ain't gonna work. It's like super cuts for stretching, right? And super niche-y.
Yeah.
Well, we were wrong, and so they had, like, I don't know what the numbers are, but like over the past couple of years, it's really hard to find an open market that has any good availability left to open stretch labs.
Yeah. I mean, they went, so this is the 2022 FTD, so we could see the past 3 years. So they went 9 franchises opened in 2019 to 64 in 2020 to 99 at the beginning of 2021, and then 148 open at the end of 2021. So, like, I'm sure though, like, that compounds. So I'm sure the next one I'd guess they probably have to, I haven't checked. I could find it online, I'm sure, but like 300 plus already open. And like way more units sold than being shown. Yeah.
And they have a lot of, like, my buddy who I helped buy Stretch Lab here in Charlotte, which I probably should have bought it myself. He's an amazing operator, but he just decided he's going to open. He has 4 open, going to open 2 more in Charlotte, and he just inked a deal to get the rights to Columbia, South Carolina, where he's going to open 3 more.
Wow.
So, he's bullish on it.
That's always a good sign when you see franchisees buying up more. And I think the lesson here, Drew, is if someone's buying a franchise, because this is the game you play with emerging franchises as a buyer, is you reach out, it's like, oh, you only have 10 or so locations, or maybe 20 or 30, but either way, it's just not a lot of proof of concept yet. And some people decide to wait, which sometimes that's the right move. It's like sometimes it makes sense.
Yeah.
But you get to a point, Stretch Lab has clearly hit it, and it'll be really interesting to just know how much they have open now in their next FDD, and also they report in these FDDs, folks, the number of franchise agreements signed, but not outlets not opened yet. So you'll be able to know how much white space is actually already taken up, even though they haven't opened yet. But they hit a point where the market, and I'm using air quotes, just decides there's enough proof of concept, and buyers flood in, and before you know it, like you said, basically the whole country is sold out. So right, isn't there this waiting game that it might make sense because it's not you don't have proof of concept yet, but there's also the risk that you could be missing out on a winner if you wait too long.
Yeah, I mean, ideally, all right. So Stretch Lab had a little backstory that I think could help with some indicators on things to consider. But yeah, I mean, ideally, it's like a little bit of a crawl, walk, run approach for a franchise company. Okay, hey, they've got a couple corporate locations open. They made that successful. They start to slowly expand into franchising. And they bring on some good franchisees, some strong fundamental franchisees that serve as the foundation. And those franchisees are successful and happy. And maybe that's, 3, 4, 5, something like that. And that might take a year or 2. Well, all of a sudden now you have a franchise base that has proven out the business model. And then it could be time to start to, hit the gas, number one, which will take a little bit more time, but that's typically how I've seen brands that sustain the growth. It's not just selling a bunch of franchises, it's about helping these people get open and get successful. They typically kind of follow that crawl, walk, run approach. I'll give you an example, right? There was a franchise that I did some consulting work that was on one of your newsletters that I can't tell you who it was. They were getting ready to make a decision that would have set them back probably 3 to 5 years. And they didn't know any different. They were getting all this advice from the quote unquote advisors, right? And they were getting ready to ink a deal with a company called an FSO, a franchise sales organization. And they only knew what they had been told. And it was a very small portion of the pie in terms of how they could expand. And so I randomly got connected with this group, and I walk in there, I was like, I don't know what you guys, there's a whole nother 80% of the pie here that you could approach if you do it the right way. And so I think that an emerging franchise brand can benefit pretty significantly having a strong franchise development competency in-house, so they understand how to manage it and how to, what to look for in a franchisee, and just that whole dynamic, right? So long story short, I helped them get that foundation in place, align with a company that was going to help them with a better strategy. And, 3 years later, they just got a massive injection of capital from a private equity company that you and I both know.
Wow. All right. Yeah. Sick.
So but that was one decision, right? That could have changed the whole trajectory of it. But it goes into as a potential franchise investor too, right? With Stretch Lab, they had Exponential Fitness. They had Anthony Geisler behind them, who had done Club Pilates. So these early Stretch Lab franchisees, they had to look at the Club Pilates track record to figure this out. But Club Pilates was a unicorn. We all should own Club Pilates. But again, kind of the similar characteristics, strong leadership team behind that both have industry experience and franchising experience. These guys are well capitalized. They have the resources needed to withstand, rapid kind of growth. They invested in infrastructure, and, they have a focus on their franchisee satisfaction and profitability. And, if you have those things, again, you never really know, but those are some of the things I think you can look for in some of these super, super early emerging franchises to figure out if they're going to be, a quote unquote type runner, of a business.
Yeah. No, I mean, I definitely agree. And it's almost like we've mentioned Level 5 Capital, the private equity firm. Like if brands mimic like internally the Level 5 thesis, which is they find an emerging brand that they think has a killer concept, they invest in the franchisor, which that doesn't apply for like just a franchisor that's trying to grow on their own, but they act as an anchor franchisee to prove out the concept, and they have the operational chops. So like Level 5 invests in a brand, they build out 50 additional units as a franchisee of that brand as well. So I think the lesson for emerging brands is like, what you said with Stretch Lab, where they kind of tapped into probably the Club Pilates franchisee network. Try to find like experienced franchisees for your first few territories that you sell, because the last thing you want is a new brand that hasn't been franchised in a different market and a first-time franchise owner who everyone's got to be a first-time franchise owner at some point. So like they may be a killer, but ideally, if you're good enough, you can find someone who's done it before.
Yeah. So I was talking to Jim Donnelly, who's one of the co-founders of Restore Hyper Wellness, which is another one of these companies that you just kind of saw hit, exponential territory over the past couple of years in terms of the growth. And I asked him, I said, what did you do? And they obviously didn't have this growth like coming out of the chute, right? Like they did the crawl, walk, run approach. And I said, what advice do you have for young emerging brands? They're kind of like the anti-franchise franchise. Like they don't consider themselves franchise people, right? They just kind of genuinely use that as an expansion strategy for expanding their company.
Sure.
And he was like, look, here's what we did at first. We had West Point connections, and we focused on West Point people because we knew that if somebody could succeed in the military and especially on a battlefield, right? Like they can operate one of our businesses. Like this will be, this is not as difficult. And then they also focused on med device folks, or folks in like the biotechnology, like sales reps in the biotech field, pharmaceutical field, because, what Restore does is kind of like that. It has a big health science component to it. And so they knew that, you had to have some chops to typically be successful in that field. So they focused on those two categories of people at first, and they had networks that enabled them to tap into that. And they got a really strong foundation of franchise owners, and they had a really, really, really good franchise development person. And, 5, 6 years, whatever it is, years later, like it's hard to find a Restore to buy these days because they kind of sold out the country, but they got that foundation, in place. So,
No, that's brilliant from them if your model should be replicable enough where if you take someone who's just got the discipline, like from the military, that's a perfect candidate. You've mentioned capital though a few times. Can you talk about that? Like, what you look for, and what is like, how can a candidate evaluate an emerging franchise to make sure that they have the capital as a brand to support growth? Because the last thing you want to do is buy into a franchise system. They sell a ton of units, but they can't handle the growth. And then as a company, like system wide, it's just not going well.
Yeah. Like franchise companies have to publish typically GAAP audited financials in their FDD. So you can look at the FDD and kind of get a feel for what their balance sheets look like. Which, the FDD is good black and white information, but again, there's always like an operational reality that's might be a little different. And so like understanding like who's behind the scenes at these companies, whether it's, it could be an entrepreneur that's had a lot of success within, another company that he exited or she exited, that you can probably reasonably assume that they have capital, and you can ask them that. It might not be on the balance sheet, but if they've had, a successful exit, then, they've been through that life cycle and have access to capital. But, the FDD and the balance sheet, and then asking and just kind of poking around who, how they're capitalized. Because you do not typically, I'm not going to say do not. You want to be wary about getting involved with a franchise that I see a lot of young franchise companies, they sell their company operations, right? They sell the company sort of like, we just want to focus on franchising. Like this is a whole new business, whole new game. We got to understand this. But when they sell their corporate operation, there goes the cash flow, right? Like the monthly cash flow that hopefully they've been using to fund the franchise investment, because it takes a lot of investment. And so, understanding how all that goes is really important, because franchising is a long game. It is not, you are not going to become profitable as a franchise company until you hit, a certain level of franchisees that are open, successful, and paying royalties. So kind of like that royalty self-sufficiency number is kind of like the first mountaintop. You don't want to be making money off the franchise fees. Or you don't want to be relying on the cash from the franchise fees to fund the venture. So, it's buckle in for the long game.
Yeah, no, definitely. I mean, yeah, I've read, I think it varies from obviously the royalty you're charging and the average unit volume of the brand. So there's no one size fits all number, but it can take up to 100 units cash flow for a system to become, like you said, royalty self-sufficient, which I think that would surprise a lot of people to think that it would take that long for the franchisor to be starting to be profitable as an entity.
Yeah. And again, there's no one answer to all this stuff. There's just all these different layers and things that, I think that's why a lot of people don't, some people buy franchises the wrong way, right? You've heard about it. They see a widget, they fall in love with the widget, and they're like, oh my God, I need to bring this widget to my hometown. And, sometimes I use the example of cookies, not named Crumble. But sometimes people get lucky and it works. And sometimes people are like, whoa, holy moly. I got to get up at 4 a.m. to get the oven going to bake the fresh food. And I got to take my kids to school. How is this going to work? And it doesn't jive with the lifestyle piece of it, but they love the widget. They love whatever it is the business offers, but they don't really look at, number one, the franchise company, and number two, what it takes to operate the business to make it successful. Because, you see it, you've been in the game. We get all the fun information, right? But what's the real information? What's it take to really make this business go? And how does that jive with what you want to be doing as an operator? So that's why it's so hard to when people come I want to buy a business that I'm super passionate about. I'm like, cool, go find somebody else to help you. I can't help you. I'm not going to help you.
Yeah.
Because it's a trap. It can be such a trap. But if you have an open mind and you're willing to look at this through all these different factors and lenses, then it can be fun, because you can look at some businesses and learn about them. Holy moly, I had no idea that this company in this business could produce these kind of numbers or whatever it is, right? So,
yeah, I think that's really good advice, right? I mean, it's definitely just off on the surface level. Just because you're a customer doesn't mean you're going to love owning the business. It's totally different. I love eating sushi, but there's no way I'm waking up at 4 a.m. to go to the fish market every day. Do not love it that much. I would never do that. So you got to understand this, like you said, the operational reality of it. Something that's interesting that I don't know if other franchisors do this. I know Culver's does it. And so they have close to 800 locations, I think. They've been around since the 1980s. Very impressive average unit volume. If people don't know it, Culver's big burger franchise, predominantly in the Midwest. They're very specific about where they'll expand. They've taken the low and slow approach, like you said, Drew. They've only had 2 closures the entire time they've been around, which is incredible. So people always talk about failure rates, and there's the whole argument franchises are safer than starting your own small business. Well, that depends on the brand, and it's a spectrum.
Yeah.
But Culver's 2 for, let's call it, I think it's 780 open in their last FDD. So only 2 have ever failed. I mean, you are well below a 1% failure rate. So that's incredible.
Yeah.
But where I'm going with it is something they do before you can even sign the franchise agreement to officially become a franchisee is they make you work in their restaurant for a whole week. And I mean, think about it. That'll filter out some people real quick where they're like, whoa, your burgers are great and I love your milkshakes, but nah, I don't actually want to do this forever or for the next 5-10 years. So I thought that was an interesting way of like you said, that's a good way to really, so I don't know if you can shadow a franchisee before you start any of these franchises, but I think it's a good practice for both the franchisor and the franchisee.
It is the best advice. It's look, all this theoretical stuff you're learning about a business, you want to cut right to it, go spend a day with a franchise owner.
Yeah, exactly.
And go spend it, and go do it multiple times if you can, because that'll give you the insight, into what the reality is going to be like, and versus, cooking it up in your imagination, right? And what you think it might be like, just go do it. And
Yeah, I think I would say that the only thing where I could see that hurting Culver's, because like I've had things, honestly, even like content creation with stuff I do on Twitter and the newsletter. I mean, it sucked early on. I wanted to quit, and I almost did, but had some conversations with people. I obviously didn't quit, but like I think early on in a venture and something new, you can maybe confuse just growing pains and learning curves with this sucks. I don't want to do it ever. Like this isn't for me. So that would be the only thing where you kind of, as an individual, have to check yourself and be like, am I saying this because it's new and it's hard right now? Or do I truly just not like this and this won't be a successful thing? And I really think only the individual can make that call.
Yeah. And it goes to like, for people that are looking at investing in the franchise, right? There's all these things we're talking about the franchise company, but you got to look in the mirror too, right? Like humility is a big thing. Like,
yeah,
for any new thing, right? Whether it's a franchise or whatever, but like being humble and delayed gratification, like not doing this for a short-term paycheck, right? Like you're willing, knowing that there's going to be some kind of, there's something long game that you're trying to achieve that you can't get doing whatever it is you're doing, whether it's the corporate world or something else, but it's not going to come easy. Nobody's going to give it to you, and you're going to have to grind. And like, I think humility kind of has a little bit that plays into like just being willing to do the shit that you're going to have to do as an owner that nobody can tell you, nobody can predict what that shit's going to be, but it's, stuff's going to happen. And that mindset is, I think plays a big role in the other side of the coin with, the individuals who have success with franchise owners.
No,
or with franchises.
Man. So completely agree. I like that.
Yeah, because I mean, dude, like again,
stuff's gonna happen.
Like this whole broker world, man, it is the wild, wild west. Like everybody's got an opinion, everybody's blowing smoke, especially right now with all these layoffs that are going on, right? Like this is God bless people's LinkedIn inbox right now. It's you get those messages from somebody from a different country. Hey, your background is amazing. Have you ever thought about starting a business? Right? For a first-time franchise owner that like is genuinely trying to figure out if there is a franchise out there, like you need to know who you're getting advice from, because there is no regulation on the broker stuff. All those certifications don't mean anything. You need to know who is giving you advice. And the good brokers will give you the tools and advice to help you evaluate any franchise they recommend to you. Like they're not going to sit there, be on the calls with you, on the reps. Like they will give you the tools that you can use to, gain a lot of experience really quickly to evaluate these franchises. But I mean, man, it's, you've seen the broker world grow. It's crazy what's going on out there. And there's all kinds of crap being pushed.
I don't know, man. I guess the FTC probably just doesn't have the bandwidth to focus on it at this granular level. But yeah, I mean, it's crazy. We'll see what happens going forward. But I feel like at some point things got to tighten up a little bit. Hopefully it does. I'm curious, man. Like any other, we talked Stretch Lab, we talked British Swim School, any other, and the K9 Resort one as well. Any other like examples you've seen over the years of just brands that turned out to be runners in your own words there?
Yeah, Club Pilates. That was a runner. Again, it's hard to buy one right now. But again, like Pilates, right? We all knew about Pilates, but nobody had mainstreamed it. Well, Anthony Geisler, who's the guy behind it, the story with Club Pilates, like they had like 30 locations, kind of founder-led company. Anthony,
I had one of their big franchisees on the podcast, but I don't know really much about the founding story.
Anyway, Anthony, he's had a couple successful exits in the fitness world. He stumbled across Club Pilates, founder-led company, 30 locations or something like that. Bought it, saw what they had, bought it, put his infrastructure team, what he knows works in boutique fitness. And again, you kind of had like, it was a lower investment, recurring revenue, membership-based model, tapping into this, figuring out a way to like take Pilates mainstream. And kind of like Stretch Lab, like the market reacted in an amazing way. And I mean, there's more guys that I know that own Club Pilates that have never done a Pilates in their life that are very successful with Club Pilates. I mean, whatever the level 5 guys are doing, I'm paying attention, right? Those guys are a lot smarter than we are.
Yeah.
What else has been a runner, man? You know the LA Mental Health. Have you been tracking that one?
Yeah. Is that like, that's one of the ones that almost worry me in that a lot of sold units, not a lot open, or am I wrong on that?
Oh yeah. I don't know what the exact number is, but it's something in like, they sold like 400 to 500 franchises before they had ever opened a franchise location. So they had like 13 corporate. They had like 13 corporate locations open, right? So they had expanded corporately. But they didn't have any franchise locations open, and so.
See, like that's where the capital question that you talked about before. It's like, can they support that growth? I mean, that's a lot of growth.
Yeah, and so they ended up taking on a strategic investment from a private equity company.
Okay, yeah, they probably needed it.
Yeah,
I mean, they also probably had a ridiculous amount of franchise fee revenue. That's what I mean. Like what you just said. That was never on the front page of some, TechCrunch or any startup or finance news source. But that's an insane amount of growth, and that's what I mean. We're like within our franchise bubble, like some of these brands just get treated. That's like an asset where it's like there's just a rush, and everyone all of a sudden is hot on one brand. And yeah, I mean, I've seen them like IFPGs kind of listing them as one of their top brands, which I don't know. I don't know what that means, but yeah, I've seen they've grown a lot. It'll be interesting to see how those new locations do when they open.
Yeah. Yeah. I mean, that's, hopefully like it's, there'll be some growing pains, but they'll figure it out for sure. So yeah, that was an interesting one. I don't know if there's any other runners out there right now like that,
Yeah.
But there will be, and you just never know. You never see it coming. You never know where it's going to come from next, right? And it's
well. Here's a question for you, because we did a little interaction on Twitter. I did a thread, folks, on a franchise called Funbox. I have no affiliation with them. I just think, from a business perspective, it's super unique. Like they put up. They build the world's biggest bounce house. Effectively, it's like It's a 25,000 square feet of pure bounce house. So it's incredibly fun for kids. That's also what I want to write about. It just like looks awesome. I would have loved that when I was a kid. But they're franchising it, but their FDE numbers were ridiculous. Where it was showing, because it's kind of like a traveling road show, right? Where you're not like you don't own a property or lease a property even on a annual basis. You can go into malls. You can set up outdoors. You're kind of this carnival that travels around your territory. And anyway, their corporate territory did like, $500,000 in EBITDA in like a 22-week period or some ridiculous number like that. Folks, do your own research in the FTD on this one. Anyway, I wrote about it on Twitter because it was just, I'm a nerd and love diving into different businesses. But Dru, you were saying you're not sure there's value from a franchisee perspective. Yeah, just thoughts there on like what characteristics led you to saying that.
Well, I think I made an assumption like I tell everybody not to do very quickly. And maybe I was in a bad mood when I fired off my little Twitter fingers got a little itchy there.
We've all been there.
So again, assumptions, I'm like, all right, so like they developed a relationship with a manufacturer in China. Cool.
Yeah.
But what else? Like what else is going to be behind the scenes that they've put together to really help the franchisees, that are going to provide ongoing value for them? And I just, again, assumptively me making like a 3-minute, trickle down thought process. I was like, I don't know if I could see it, but I haven't taken the time to do any of the analysis, which again is, the risk in, making assumptions. So,
all right,
but
fair enough.
I would think PR is a massive thing in that business, right? So like, how do you get connected with like the local news stations to like, get all the free PR and stuff? But
I think that, the corporate's done a good job of that. So that's a good point. Like, I think it's almost, some brands, like just the businesses they run, lend themselves to like getting press. Like, and this is like, I mean, I'm sure local news stations, right? They see if you open up in the Charlotte area or Wilmington, right? This, and all of a sudden there's some company putting up a massive bounce house, and every kid in Wilmington's going to, like, that's cool that's fun to write about. So it definitely has that element. But my thought is generally now, this is not to be like insulting, but I just think it shows how hard it is to like run a business, start a business. I really think most, like your average person, just getting from 0 to 1 is so hard for them. And that they, from figuring out the brand to figuring out all the operational nuances that come with any business, figuring out what are your best marketing channels, what tech stack should you use, all these different things, pricing, your pitch to customers, your pitch to hire people and why they should work. Like there's so many different things. And like, I think that like a lot of people just think, oh, like they're not a big brand. Nobody knows about them. You shouldn't be paying a franchise fee and a royalty. But I don't know. I just think like for most people, it's like you should buy a franchise because you probably can't even make a great website, let alone all the other stuff that you have to figure out. Which maybe that sounds negative, but I just think it shows like, again, like it's just hard to go from 0 to 1.
Yeah, no, I think it's great advice. I think what you're saying is amazing advice, and it is the world for a lot of people, right? And that's where franchising can be amazing, is not having to worry about a lot of that stuff, and if you get in with the right franchise, it's the right fit, like it's life changing, like literally life changing. Like I had a guy text me, I helped him get into some supercuts, and he was like, "Dude, thank you, this changed my life," and I'm like, "Wow." Shit, that was cool. So like, but like, it's the same thing. It's just a lot of layers to it, big decision, a lot of ways to go about evaluating the franchises to figure out if it's the right fit kind of thing. So yeah, but no, it is such a cool thing. You never hear about those life-changing stories a lot of times either, right? Like it just doesn't get the press like a lot of other stuff, but yeah, it's, it's a cool thing. Man.
It's cool, man. I swear, like franchisees and especially the multi-unit ones are like I don't know what the words are, but like they're just like rich people in disguise almost, like because you all of a sudden, like I've had conversations and on Twitter and even before this, you just kind of, they're like, oh yeah, I own 15 or 20 of these. And I'm like, oh, like, wow. Okay. So, and it's not some fancy title at an investment bank or some other company. But I mean, these guys have more access to cash flow than 99% of America. It's crazy what you can do.
Yeah, and you're doing a good job of getting those stories out there, right? Telling those stories to help people, like their eyes get open to what could be possible. You're doing a really good job of that.
I appreciate that, man. But yeah, that's the goal. I mean, like, it's really just franchising isn't best for everyone. Like I said before, right? A lot of people do have a hard time going from 0 to 1. But if you're not that person, if you are a savvy entrepreneur and can figure this stuff out on your own, you're probably not going to like being in a franchise because you're not going to be, you're going to have someone telling you what to do, what you already know how to do. So it's not for everyone, but I do think if you're looking to start a business, you should at least check the box of, I did my research on franchises and it's not for me. But like, I would bet that for a lot of people, they'd actually be surprised at how many brands would actually be a good idea for them.
Yeah, it's fun.
So,
you get to learn about how businesses operate and make money. So
that's the thing. At a minimum, you're going to have fun. All right, man, this has been awesome. A little bit longer of an episode than usual, but I had fun talking. So why not let it go? Is there anywhere online where people can follow you along, whether it's social media, website, and learn more about you and what you're doing?
Yeah, like my pathetic attempt to try to be a tweeter is in work in progress. So do not follow me on Twitter because it's follow the wolf and go follow somebody else. But no, the easiest way is just to Google me, Dru Capenito. And I think I'm the only Dru Capenito in the country. So I'm pretty easy to find if you want to talk franchising.
All right, cool. Well, I mean, we can plug. He's got a website. I think he's being humble. We'll plug your website in the show notes, man, if people want to reach out. All right, man. This was fun. We'll talk soon.
All right. Thanks, Wolf.
Thanks for listening to Franchise Empires. We're coming to you soon with actionable insights to take the next step on your franchise journey. So make sure to subscribe on Apple, Spotify, Google, or wherever you listen.